5 more minutes, guys. So if you guys are here for the House Hacking for Veterans webinar, you are in the right place. We have one of the top real estate and mortgage experts across the entire United States, and they're here to show you how you can use your VA benefits to be able to build wealth, buy your next home, and all that jazz, and what the steps are. But mainly how you can maximize all of your VA benefits in the process. So you can get the most bang for your buck. And not only that, but being able to save a lot of time in the process. So congratulations to each and every one of you for being here. 5 more minutes. And you know what? For those of you that have just joined, go ahead and type into that chat box where you guys are currently located and as well as what branch did you guys serve, just so we can give you a warm welcome and get yourself used to the chat box. We're going to definitely be using that tonight. We're going to get started in 4 minutes. Getting started in 4 minutes, guys. Go ahead and type into that chat box where you guys are currently located and what branch did you guys serve. Three more minutes, guys, before we get started. Love that people are starting to join in now. Love it, love it. And for those of you that have just signed on, go ahead and type into that chat box where you guys are currently located and what branch did you or your spouse or partner serve or are currently serving. Greg, welcome, welcome from Willis Point, Texas, Air Force. Welcome, welcome, Greg. I see you here. Two more minutes, guys. 2 more minutes. If you haven't done so already, go ahead and type into that chat box where you guys are currently located and as well as what branch did you or your partner or spouse serve, so we can go ahead and give you guys a warm welcome and so we can customize this webinar to you guys. Remember, this is all for you. We have nothing to sell you on this webinar. This is a webinar that is 100% free. Not only that, but we will be giving out bonuses at the end of the webinar. So you definitely want to stick around. And those bonuses are also 100% free that we will not sell you on anything. So this is all for you guys. And we want to thank you guys for your service in the process. This is how we keep our webinars completely free for you guys. We got Adolfo from Miami serving the Army. Welcome, Adolfo. I'm here Miramar, if you know where that's at. Elder from Tampa, Florida, Navy. Welcome, welcome. iPhone, Army 11B from Tampa. Welcome, welcome, iPhone. I know that's not your name, but that's your display name. We shall be getting started shortly. iPhone's name is Florentino. Welcome, welcome, Florentino. Let's see if I can get your name here and change it. So I know who you are. Let me put Florentino. Cool. Just change your name. We're going to get started in 1 minute, guys, about a minute and 30 seconds. Henry from Air Force, Pensacola. Welcome, welcome. All right. Let's give it 30 more seconds, guys. Some more people joining in right now, usually at 8 p.m. Eastern, 7 p.m. Central, and 6 p.m. Mountain. Usually is when we start seeing more and more people join. So give it 30 seconds before we get started so we can introduce the expert of tonight. 30 more seconds, guys. Excellent. Excellent. Almost there. RD Legler from Lake City, Florida. RD, if you want to go ahead and type into the chat box to everybody and not me privately, that'll be great. All right, but let's go ahead and get this party started. So tonight, we have one of the top real estate and mortgage experts across the entire United States. Let's go ahead and bring our energy up because tonight we're going to go over how to use your VA benefits to build wealth, buy your next home. And this is the house hacking webinar for veterans. So without further ado, let's go ahead and introduce our expert of tonight. His name is Zach Tarbet. Let's go ahead and get a mic check and a video check. Zach, are you there?
What's going on, everybody?
There you go. Mic test. Great. So let's go ahead and go to the next slide so we can do a little bit of housekeeping tonight. So we can keep this webinar structured. So the first half of the webinar is going to be 30 minutes. This is going to be a 1 hour long webinar, 30 minutes of presentation time and 30 minutes of Q&A. So while Zach is presenting and giving you all of the information that you need about how to maximize those VA benefits of yours to become a homeowner and to be able to build wealth, go ahead and start typing in your questions inside of the chat box, because at the end of those 30 minutes, we are going to start the Q&A session where I will come back up and read all of your questions in the order that they were received in the chat box. So that's very, very important because this is where we participate with you. Not only will you learn about the questions that are being answered, but you'll learn about the questions that you didn't think about asking that other people are asking. So a lot of people don't know how powerful the Q&A session is and you want to stick around. But not only that, but at the end of the webinar, Zach has a wonderful 100% free bonus for all of you guys that's exclusive solely for webinar attendees only. So congratulations on being here, guys. Thank you guys for your service. Zach, go ahead and take it away, brother.
Awesome. Thank you, everybody, for being here. A little bit about myself. My name is obviously Zach. I'm an Army veteran and mortgage professional. I spent about 9 years in the Army. I was an 11 Bravo, infantry guy for any other infantry guys and gals out there. So after 9 years, 8 years, whatever, I basically got out right before my 9-year mark. I was kind of like, hey, I did my time. I'm done. But also, I used my VA loan twice when I was in, and nobody showed me anything about it, right? Nobody sat down and was like, this is how you can leverage it. This is what you need to know about it. It felt like by the time I got to the closing table to sign for both my homes, I had no idea what I was doing. All I was doing was just signing my name on some paperwork and going about my business from there. So I'm really passionate about giving us the education and information I wish we would have got during our time in service. Other than that, I'm a proud father. I got a 9-year-old. He's about to be 10 this year. If you got kids out there, I think it is absolutely crazy how fast time moves once we have kids. A little bit about like my credentials and expertise. I've used the VA loan multiple times myself. I've house hacked with my VA loan, so I'm practicing what I'm preaching, and I've helped hundreds of families do the same thing. So this is what I do. This is what I'm extremely passionate about, and I look forward to sharing this information with you as we go forward throughout this process. So let's get to it. So what is the VA loan? Well, first of all, it was created after World War II in 1944 to help service members reestablish their life after the war. Who can use it? Active duty service members, veterans, reservists, and National Guardsmen, and eligible surviving spouses. So the key benefits are that there is no down payment. There is no private mortgage insurance. There's competitive interest rates when we compare this to other loans out there, and the benefit can be reused multiple times. So this is an absolutely outstanding benefit earned through us. There really is no other loan program out there, and this is what separates the VA loan from any other loan program out there. Understanding your certificate of eligibility. Now, I like to refer to your COE as the golden ticket. This is what we have to use and retrieve to verify that you can use your VA loan. no COE, no VA loan. Really, where I see people get hemmed up with this is maybe you're an older service member, or maybe you're a reservist or National Guards member. This is the people that I really see get hemmed up with this. Because if you can't get your COE, again, you can't use your VA loan. You have two ways of getting it. First, you can go get it yourself through your web LGY, or excuse me, the e-benefits portal, or you can request it through snail mail through the VA, or you can have a lender like myself get this for you. Typically, when we request it through the VA, it's instantaneously, unless we have to submit a manual COE request. Then that can take 2 to 3 business days, but it's very fast for us to do it, or this is ways that you can get it yourself. Types of VA loans. I really like to go over a comprehensive view of what kind of VA loans are out there so you understand. Of course, the most common VA loan out there is going to be your VA purchase. You can use this for single family homes and multifamily homes. It is 0% down. This is the huge benefit, but just because it's 0% down doesn't mean it's a free loan. And I'm going to explain that a little bit more later. Now, the next two programs that I'm going to talk about, if you are currently a homeowner, you are probably being harassed to fall into one of these two programs. So I'm going to explain what a VA cash-out refinance is first. This is how you can pull equity out of your home, but what that person who's calling you isn't telling you, especially if you're like myself, who has a low interest rate of, let's say, 2.25% like I do. They're telling you, hey, we can give you a large lump sum of money, and that money is tax-free. That is absolutely true. But what they're not telling you is you're going to go from a 2.25 to whatever today's interest rate is. It could be a 5.75, it could be a 6.25. It just depends on what's offered today. The benefits of the VA cash-out refinance, like I mentioned, it is tax-free, and you can use this money for home renovations, investing, debt consolidation, etc. It is a good program, but keep in mind, you will lose your low interest rate. If you are interested in pulling equity out of your home, this is when I would recommend a HELOC, home equity line of credit, or a HE loan. Those are separate programs, nothing to do with the VA, but that's something that I would recommend so you don't give up that low interest rate. Now, if you bought a home in the past, I'd say about 2 years, you're probably being harassed about an IRRRL. What is an IRRRL? This is an interest rate reduction refinance loan. It is what we like to refer to as a streamlined refinance. Minimum requirement to go through an IRRRL is that your interest rate needs to get lowered by 0.5%. And just like in our time in our military, just because it's the minimum doesn't mean it's in the best case for you, okay? That's the minimum standard the VA gives us. My professional rule of thumb is before you go through an IRRRL refinance is that you want to lower your interest rate by 1 full percent. You really want to make this beneficial to you. And oftentimes I see these people hounding you, right? They're buying your information, they're calling you, they're trying to sell you on something. And they're like, yeah, we could lower you a 0.5% now. It's not always in your best interest. But the IRRRL is a great program to lower your interest rate. They will tell you you skip 2 mortgage payments. You are not skipping, pardon my French, I'm gonna say some bad words here. You're not skipping shit. It's being rolled into the back end of your loan. So they're trying to tell you all these things. Just make sure you know what you're getting yourself into. The process is extremely easy. There is no income verification. There is no appraisal. It is an extremely smooth process, and it is great if the numbers make sense for you. I'll end this last piece. If you are planning on selling your home in the next 12 months, you do not want to go through the IRRRL process. And the reason why is they're going to roll your closing costs into your loan amount. And if you're planning on selling, that could eat into your proceeds or put you in a bad position if you want to sell. If you have questions about the IRRRL specifically or cash out, please let me know. On the VA renovation loan, this is a program that is often not talked about when it comes to the VA loan. You can either use this program for your current home or a home that you want to buy and finance the rehab costs. You can go up to $50,000 in repairs. This can be for new countertops, kitchen, flooring, paint, whatever the case may be, right? Up to $50,000 in repairs. There's no need for a separate construction loan. However, similar to the VA cash-out refinance, if this is for your current home, it is basically you're going to lose the terms of your loan. So if you have a 2.25, you want to go through renovation, you're going to be subject to whatever today's market rate is. So that is the downside of a renovation loan for your current home. If you're trying to get into something and fix it up, this can be a great opportunity without having to come out of pocket for the financing cost. VA one-time close. I really feel like this is one of the best kept secrets that more veterans need to know about. With the VA one-time close, we refer to it as the OTC. You can buy land, You can finance the construction of the home and the improvements to the raw land, so sewer, electric, all that good stuff. And then it converts to your permanent loan from there. This is a fantastic program that rolls everything into one. So if you're being told that you can't buy land and build a custom home with your VA loan, that is absolutely not true. And this is the program that allows you to do that. Oftentimes, though, I'm asked this, and I'll make sure it's very clear. This OTC program is not for multifamily properties. It is only for single family properties. I want to say that again. If you want to buy land and build a custom home, it can only be done with a single family residence and not a multifamily residence. I know I'm going to get asked that later, so I just want to make sure that's clear because somebody always asks it. So let's look at the costs associated with the VA loan. When I started talking, I said the VA loan is 0% down, but that does not mean it's a free loan. And this is a huge misconception in the military community. Earnest money deposit can typically be up to 1%. I view this, if you've ever gotten an apartment, it's your security deposit. It's your good faith deposit showing the seller that, hey, I'm putting this money forward and it is applied to your closing costs. So it's not a fee paid to the seller. It's subtracted from your total closing costs. The best way I could sum up closing costs for whoever's purchased a vehicle, it's your taxes, it's your title, it's your insurance, extremely similar to that. Now, with that being said, the home inspection is not required, but please, please, please do not ever skip it. If you are working with a real estate professional that is telling you to skip your home inspection, you need to find a new real estate professional to work with. And why do I say that? A few $100s for that home inspection can save you thousands of dollars in headache down the line. The home inspection is for your peace of mind. They're getting into the nitty gritty of the home. They're checking the roof, the HVAC, foundation, all these things that are, again, are big ticket items. If you skip this just to save a few $100s, you are putting your financial future at risk, because if one of these big ticket items breaks, and it's not if, it's when, that's what comes with homeownership, you're going to be in a bind. The VA appraisal. This is for the bank's peace of mind. We want to make sure that you are paying a fair market value for the home. With that being said, the home does have to meet VA standards. What we mean by that, it has to be safe, sound, and sanitary. Okay, it can't have busted windows. It can't have a hole in the roof. It can't have foundation that's totally messed up, right? Because that puts it at risk of you wanting to leave the property and foreclosing on the property. This is required by the VA, and the VA sets the price for this depending on where you're at. And if you're looking at a single family home or a multifamily home, it can range anywhere from $600 up to $1,200. Some lenders do collect this fee up front, so just be prepared for it. The reserve requirement. This is extremely important to note, and this only applies to multifamily. Again, the reserve requirement only applies to the multifamily technique here. You have to have 6 months of PITI. That's your principal, that's your interest, that's your taxes, and that's your insurance in savings. 6 months of your mortgage payment saved up. It has to be in your bank account, and it cannot be gifted to you. You're not paying this at closing. We just need to see that you have the money saved up 6 months of your mortgage payment when you want to go through the multifamily technique. So let's break down what is house hacking and understand it, specifically starting with the multifamily method. House hacking is a great way whether to buy a property and reduce your living expense, or even have your living expense fully covered. This applies whether we're talking multifamily or single family. But the multifamily method is one of my favorite methods. And the reason being is there's no other loan program out there where you can buy up to a 4-unit property with 0% down. This is a huge benefit that we earn through our service as military veterans. So you buy a multifamily property, you live in 1 unit, you have to live in the unit. This is not meant for true investment properties, okay? The VA loan is only intended for your primary residence. You occupy 1 unit, you rent out the rest. Some days I see it where it's covering the entire mortgage payment, or it's drastically reducing a veteran's living expense. So this is an absolutely fantastic benefit. You're building wealth. Not only are you living at a lower expense, you're building appreciation, which in my personal opinion is the real name of the game with real estate. I'm not showing a get rich quick scheme, because I feel like appreciation, you need to know it takes time. The average appreciation in America is anywhere from 3 to 5%. I don't use COVID times appreciation, because we saw some markets, my personal market here in Colorado Springs, right outside of Fort Carson, we saw as high as 30% in 1 year, which is not normal. So kind of looking at it from the single family method, This is a great method. Maybe you don't want the headaches that comes with a multifamily, but you purchase a single family home, you rent out the other rooms. Okay. You get some roommates. It could drastically reduce your living expense. I know when I did this at one point with one of my homes, I was living absolutely mortgage free. It covered mortgage, utilities, everything. If you do have some space, ADUs, additional dwelling units, accessory dwelling units, mom and pop suite, casitas, whatever you want to call it, are becoming extremely popular. Some people are converting their garages into living spaces. So if you're renting out, let's say you have a 4-bed home, you live in 1 bedroom, you rent out the other 3, plus convert the garage into a living space, you are cash flowing on that very nicely. I do see some people leverage the short-term rental technique. I just kind of feel a little bit iffy about that, putting my house on Airbnb. I'm staying there, and then I have some random people coming in and out while I'm still in the home. I don't know, to each their own. I have also seen some people do house sitting and pet sitting. God curse me, I love dogs, but I'm deathly allergic to dogs. So it's not anything I could personally do, but I have seen people leverage that. Some of the benefits of the single family method compared to the multifamily is going to be you have more of a pool. More homes are available for single family than multifamily. You're also going to have more neighborhood options. Multifamily may be constricted to certain parts of town, depending where you're located. Your appreciation can go up faster with a single family when we compare that with multifamily. And you do have an easier sales strategy compared to a multifamily because you can, there's more buyers when we look at a single family home when we compare that to a multifamily home. And the big thing is lower maintenance, right? You just have to worry about one home instead of other units that comes with a multifamily. So this is some pros and cons I see. And take a second here if you guys have any questions.
Yes, guys, go ahead and type in all of your questions into the chat box. I see some people already are typing these questions to me privately. Make sure that it is to everyone on the chat box so everybody can see that question and we can read it out loud in the order received. Thank you.
Awesome. All right, let's keep going. All right, so property stacking, right? This is something that a lot of people don't know. You can own multiple homes at a time with your VA loan. You don't always have to sell a home to use your VA loan again. This is a big misconception. It all depends on how much entitlement you have remaining. We call it bonus entitlement. Everyone is going to have different bonus entitlement. I'm going to have different bonus entitlement than you. You're going to have different bonus entitlement than me. What do I mean by that? I own 2 homes right now with my VA loan. I have enough bonus entitlement to buy a 3rd home up to $432,000 with no money down. If you are curious how much bonus entitlement you have, let's talk. We'll have a link later for that, but we'll get to that point. So how do you do this? First, you acquire your first property. You occupy it as your primary residence. After you fulfill the occupancy requirement, you relocate and leverage your VA loan again. You're using your remaining entitlement to get into a home with no money down. You can rinse and repeat this method until you've expended all your eligibility. And then this is when we'll talk about other loan programs later on. But again, you don't have to sell your current home to use your VA loan again if you have enough remaining entitlement. You can do this with a single family home or a multi-family home. I really like to think of the active duty perspective here, right? If you're stationed at, let's just say Fort Carson, I was in the Army, so bear with me, and then you PCS to JBLM up in Washington, you can use your VA loan again, all right? So this is a huge benefit. This is how you stack property with your VA loan and build wealth through real estate. Let's look at why VA loans are perfect for house hacking. Again, 0% down, especially when we compare that with the multifamily technique. There's no other loan program out there that will allow you to buy a 4-unit property with no money down. Like I just mentioned, you can own multiple homes at a time with your VA loan. The interest rates are going to be better than conventional loans. Typically, I see anywhere from 0.5% to 1 full percent better. This is increasing your purchase power, increasing your ROI, and decreasing your monthly payments when we compare this to other loan programs. Now, a big thing with VA loans that really helps you qualify, and this is only for multifamily, is we can leverage 75% of the rental income from the units you will not be living in to help increase your purchase power. So what do I mean by this? Just for example, when you're looking at a single family home, your buying power may be only $350,000, for example. But let's say you're looking at a multifamily property. we can leverage that rental income to increase your purchase power to, let's say, hypothetically, 500,000, giving you more opportunity in the market when we look at that rental income qualification factor compared to a single family home. So this is a big thing to know. Multifamily with your VA loan increases your purchase power. VA occupancy rules, y'all need to know. This is extremely important. I always get asked, how do I get around this? How do I do blah, blah, blah? And just to be very honest, if you are trying to get around it and you get caught, you are committing mortgage fraud. I'll say that again. If you try to get around the occupancy rule and you get caught, you are committing mortgage fraud. Like I stated, the VA loan is for primary residences only. But typically what we want to see is you occupy a home for 12 months. But there are situations where you do not have to do that. I like to think of the active duty example. You just bought a home. Now you're on orders. We're not going to make you wait a full year to use your VA loan again. You have what's called an extenuating circumstance. Some things I've seen, maybe you're not in the military anymore, your job relocated, you're trying to get different school districts for your kiddos. There has to be a change to your life that incurred less than 12 months to allow you to use it again. Once you go past 12 months, it's absolutely fine. You've met the occupancy requirement. You are good to go. Again, the big thing, I just like to harp on this because I always get asked, this is for your primary residence only. If you do not occupy the home within 60 days, you are committing mortgage fraud. There is a form that you sign at the end at closing that says, I will occupy the home within 60 days. If you do not, you are putting not only your benefits at risk, but your freedom at risk. Do not play with mortgage fraud. It is investigated by the FBI. And I get asked all these questions all the time, and I'm not going to help you break the law, unfortunately, guys. So let's look at a real life example of a multifamily house hacking technique. So purchase price of $500,000 with a 0% down VA loan. The other 3 units rented out for $1,200 a piece. The mortgage payment with everything included, principal, interest, taxes, and insurance, what we call PITI, was $3,600. This veteran was able to live in 1 unit and rent out the other 3 units and completely live mortgage free. This is absolutely phenomenal because think about it. If you could take your housing expense and save that or invest it, what would that do to your financial future? Be life-changing, right? And the other thing that I really like to look at with homeownership is you are building wealth through appreciation. This, to me, is the name of the game, right? You are building wealth over time. You're paying down your balance. Your home continues to appreciate that 3 to 5% a year. Not only are you living with no housing expense, you're building wealth through that property as well. This is a great way to do it. Kind of taking a step back and looking at the single family technique. And when we look at this, right, you're living in 1 bedroom, you're renting out the other bedrooms. In this scenario, this was a 3 bed, 2 bath. They were renting out the other 2 spare bedrooms at $800 a piece. Total monthly payment for this veteran was $2,500, but they're collecting $1,600 in rent, bringing their total housing expense down to $900. This is absolutely a huge benefit, right? This is bringing their housing expense down like 75% off the top of my head. What could you do with that extra income? How could you reinvest it? How can you leverage that into another vehicle to build wealth? This is what I want you all to think about. This, you're freeing up capital to reinvest it into something else. So this is just an example of the single family technique as well by the numbers. Now, you used all your VA loan benefits. What's next? This isn't the end of the road, right? There are other loan programs out there that you can leverage once you've used up all of your VA entitlement. FHA loans. Again, FHA loans are going to be for your primary residence only, but you can purchase 1 to 4 units with 3.5% down. The downsides of FHA is you're going to have mortgage insurance on it for the life of the loan with only 3.5% down, but it's a great tool to continue to build your portfolio after you've used all your VA benefits. Huge change to conventional loans. This just happened last year. Before, with conventional loans, if you wanted to buy a multifamily property, minimum was 15% down, regardless if it was your primary residence or not. Now it is as little as 5% down for up to 4 units. Again, that is for your primary residence as well. But let's just say, hey, Zach, I have this equity. I don't want to move again. This is when we get into investor-specific loans. One of the most key investor loans out there is a DSCR loan, debt service coverage ratio loan. This loan is absolutely fantastic. Why? We don't look at your debt to income. We only look at how much does that property rent out for. If it rents out for what the your mortgage payment is, the 1-to-1 ratio, you are good to go. This is absolutely a fantastic benefit. There's also some other investor specific loans, maybe such as conventional investment, but DSCR gets you around a lot of the paperwork and writing, which I think is the key there. So if you're curious on how to get started specifically with your VA loan, first steps is going to be getting your COE. Like I mentioned, that is your golden ticket. No COE, no VA loan, and that is the first thing we request for upfront. Then from there, you want to identify target markets. What is causing your market to grow, or market you want to move to grow? Is it military? Is it college? Is it contracting? I'm specifically right outside of Carson in Colorado Springs. We have a bunch of DoD companies coming. We have a bunch of missile defense companies coming. We have Amazon here now. There's a lot of growth here. So you really need to look at your current market and what's causing growth. Or is your town declining and it may not be the best place to invest in? You really need to look at that. Build a great team. You really want to partner with somebody who knows and understands VA loans. Like I said, I am a mortgage lender. I can help you with your VA loan. And we have a state or all 50 states covered by real estate experts, real estate agents who can help you map out deals, find the right deals, and negotiate the right deal for you. As long as the numbers make sense for you, then you are good to go ahead and submit your offer. It can take as little as 30 days from under contract to keys in hand to get you into a home. So the process can be pretty quick. I would say from pre-approval to shopping to under contract, realistically, you're looking at about 60 days though. Could be longer, could be less, depends on your specific situation. The fastest I've gotten somebody into a home was 12 calendar days. It was a fast process, not what I recommend for your first home, but it can be done. So overcoming challenges and important considerations. Keep in mind, a great benefit of the VA loan, especially with multifamily, we can leverage 75% of the rental income from the other units to increase your purchase power. There is no minimum credit score requirement with your VA loan. If you've been denied because you didn't have a 620 or 640, it's because that lender had a minimum credit score requirement. But I can tell you VA guidelines specifically state there is no minimum credit score requirement. So what do we look at? Maybe you have not perfect credit. We look at your past 12-month history. Were your payments on time? If they weren't on time, what caused that hardship in your life to miss a payment or two? Big thing you got to know with VA loans and property management. If you have no experience managing property or owning property with your VA loan and you want to purchase a multifamily home, you're going to have to hire a property manager for the first 12 months. Now, I have some people tell me they don't want to do it. They don't want to pay a property manager. And I'm just going to look at it from a different angle in a positive light. You don't know how to vet tenants. You don't know the local laws with lease agreements. You don't even know how to write a damn lease agreement if you've never managed a property. And you don't have the tradespeople or handyman people to help you when something breaks. Again, it's not if, it's when something breaks. So they're going to be able to help you, guide you. How do you screen tenants? How do you write the leases? What are the local laws you need to be aware of? Because some states are landlord friendly and others are not whatsoever. So this is a huge thing that you need to know when you're going through it. So I think hiring a property manager the first 12 months, that rule is in place to protect you as the veteran. And then strategic market selection. Again, you really want to look at what's causing that growth. How is the rental rates? Have the rents been going up or has it been going down? Is the population increasing or decreasing? What jobs are going out there? Because this is what's going to impact your future rental income. A lot of people think if I'm renting out a unit for $2,000 a unit right now, that's your forever rent. No, rent can increase, or if you're in a declining market, it can decrease. So you want to be really strategic with what market you want to invest in with your VA loan, or really any other loan that we're talking about. So to bring this all together, bring it all home, right? The VA loan, in my opinion, is the best loan program out there. 0% down, no private mortgage insurance, and you can use it multiple times while owning multiple homes with your VA loan at the same time. You have two ways to house hack. You can look at multifamily property or you can look at single family property. It's whatever you feel comfortable doing. There is no wrong answer here. The perfect combination, VA loan plus house hacking, you can reduce your cost of living or potentially live mortgage free while building equity. You want to make the numbers work. It doesn't matter how bad you want the deal. If the numbers don't make sense, You don't want to force it. You're going to put yourself in a bad position. So you want to make sure these numbers make sense for you. Then next step, you want to schedule some time to speak with us to go over everything and make sure you go on the right path forward, because I know how critical it is. I know how scary it can be to leverage your VA loan, because a lot of the times we often go on Google, type in VA loan, and we're talking to 20 different people at the same company. That's not the case with us. You call our number, you're going to talk to me. You're always going to talk to me. And this is how we're a lot different than those call center environments. So now we're going to wrap this up, open this up to questions, and allow you guys the opportunity to schedule a one-on-one to start your house hacking journey.
There you go, guys. So that is the free 100% free bonus from Zach and the team. And they're going to give you that one-on-one homebuyer VA strategy call to be able to get you from point A to point B. So Zach, what are they going to get on that one-on-one strategy call?
Yeah. So what I do is I see where you're at now and where do you want to go, right? Then from there, if you would like to start the process, we can get you pre-approved so you know exactly how much purchase power you have. From there, we connect you with a trusted real estate agent in your market who understands VA loans, understands how to find deals, understands how to analyze deals as well with us. So not only do you have me, you're going to have a trusted realtor, because I'm not a realtor, help you throughout the process.
There we go, guys. So we only have 12 spots left to book that one-on-one. It's not for me. It is definitely Zach's calendar. So I went ahead and typed in that link into the chat box so you can book that one-on-one. So we can go ahead and move on to the Q&A. And by the way, don't forget, go ahead and type in the chat box any questions that you have so I can go ahead and read them out loud to Zach and he can answer them. So first question that we have here is by Elder. How can I use the 26.7? I think that's what it is called. And do I being 100% pay any fee? I'm not understanding I'm not sure if I understand the question. Do you, Zach? Do you see it?
26.7, that's the VA handbook. I like to joke, if you're a buyer in the VA handbook, then you probably need a different lender because they should be helping you with everything. And then what was the last part with that?
It was, and do I being 100% pay any fees?
So closing costs are still a thing, even though you're 100%. Again, everyone hears 0% down and thinks it's a free loan. Depending where you're at, though, you may have some incentives. You may not have property tax. You may have discounted property tax. You're also not going to have to pay the VA funding fee since you have more than 10% disability. So you will save some money there, but it just really depends on your specific scenario. And I think that's a better conversation. If you book a one-on-one, we can dive into that.
Yep, he just booked it right now. We got Bruce in the house that just booked his one-on-one. Congratulations, Bruce, which is that person that just asked that question. 11 spots left. Next question is from Florent. Actually, no, let me go a little higher. From Steve. Multifamily reserves are savings only, or can you use your 401k or a Roth in lieu of savings?
Good question. As long as you have access to it, so some of those have different terms, as long as you could withdraw it for a housing expense if need be in the event of emergency, you're good to go. So TSP I know is good. As long as your terms are fine for your 401k and Roth, yes, absolutely use that for reserves. It does not need to be in a specific savings account. Great question.
My brother Jeff just booked that one-on-one. Jeffrey Naughton, congratulations on that one-on-one. 10 spots left. I put the link in the chat box for you guys. Every single time somebody books, I'm just gonna, go to the next question afterward. So Florentino asked, do you have to have equity in the new property in order to get a renovation fixer upper loan?
Not necessarily, because what's going to be calculated is the ARV after repair value. So you could put that equity into it with repairs. It doesn't need to already have equity off the bat.
There you go. So let's see here. Next question is same from Florentino. To find the right deals, do you help find the property for the buyer?
I do not specifically. That's what I have realtors for. So I like to joke, I give you the money, the realtor is going to help you fucking spend that money. All right. They're on their boots on the ground. They're opening up doors. They're negotiating the contract. They're going to put you on a search for that specific market. That is not what I do. I handle your VA loan. I'm the money man. Realtor is going to open up the doors and help you find that deal on boots on ground.
There you go. We got Mario Rodriguez booking their one-on-one, 9 spots left, guys. And as well as we got Anthony Rowan asking, not asking, he's saying definitely would like to schedule a talk with Zach. Go ahead and click that link in the chat box, Anthony, to book that one-on-one with Zach and the team. Florentino, how much do your realtors charge? Great question.
So
That's not a bad question.
a good buyer's agent doesn't need to have the veteran pay their damn commission, right? The realtors that we work with are going to go negotiate for the seller to pay their commission. I've yet to have anyone in our network request the veteran to pay their commission, because if they did, they ain't going to be in the fucking network. Just part of my French here. But yeah, you should not have to worry about paying your realtor. I know that NAR lawsuit happened. And if a realtor is charging you commission, that realtor sucks at negotiating for their commission, is all I'm going to say.
Don asking, I have 110K in equity. So how can I use this money to invest?
Depends on your goals. That's a one-on-one kind of conversation there, because I don't know what you want to do. What are you comfortable with? How much do you want to invest? How much risk are you open to? That's a better conversation for a one-on-one. If you haven't booked one, please do, and then I could give you better insight based on your personal goals and situation.
There you go. So go ahead and click that link in the chat box that I posted just 2 chats ago or 2 messages ago. Just scroll up and you'll see that link there to book that one-on-one with Zach. Florentino saying, wow. And Kiki asking, how can you get a low interest rate on a multifamily?
How can you get a low interest rate on a multifamily? I love when people always ask, how do you get the lowest rate? How do you get that? Well, the lowest rate does not always come with the lowest fees. What I mean by that is a lot of lenders will tell you, I can get you, let's say a 4.99, for example. What they're not telling you is how much it's going to cost to buy the rate down to 4.99. So what I always look at is what rate are you currently offered? Because there's 28 factors that go into determining someone's interest rate. The people on this call, not everyone would get the same interest rate offered. I could already tell you that right now. So what do we look at? We look at credit score, we look at debt to income, we look at property type. With that being said, does it make sense to pay points? Not always, because I just compared with somebody, they wanted to pay 2 discount points, which is 2% of your loan amount. They were only going to save like $70 a month because they have a low loan amount. So with that being said, it's a loaded question. Again, if you're talking to some of these lenders, they're going to just sell you on rate. They're not going to do anything to discuss fees with you. And then you're going to get to the end, and then you're going to be surprised with how much you actually have to pay just to save sometimes like $100 a month for the lowest rate.
All right. So 1/3 of the way gone. We have 1/3 of all booked appointments gone. 8 spots left, guys, before Zach is completely booked out. Keep in mind that this is 100% free for anybody that wants to book on this webinar alone. So only exclusive to webinar attendees, where Zach does charge for these meetings, and he is not charging anybody on this webinar that books that one-on-one. So congratulations for all of you that are booked. Like, for example, Anthony and Florentino that just booked that one-on-one. I see you guys here. So let's move on to the next question is, what's the minimum credit score you've seen veterans successfully use to get approved for a VA loan for house hacking?
Oh, I love this one.
Hmm.
The lowest credit score I've gotten through the door is 523. And the big thing with credit score is you can have a low credit score, but everything we look at is what's your credit history? What's your payment history? Where a lot of people get confused is that they're like, oh, there's no minimum credit score, I'm good. Ladies and gentlemen, if you are behind on your bills blatantly, you cannot get approved for a VA loan because you're a high risk, right? If you can't manage your debts, it doesn't matter, right? The no minimum credit score, we really look at that credit history. And if you did have late payments in the past 12 months, we need to see what happened. Did you have a medical emergency? Did you have a job loss? If you just tell me, Zach, I just decided not to pay my bills, that's not an excuse. I can't justify that. But I've had people go through cancer treatment. I've had people lose their jobs. I've had people lose their spouses and put them in a financial burden. That's an extenuating circumstance. But the excuse is, I like to call this the private excuse. Oh, I just didn't feel like paying my bills, is not justifiable. So we look at that credit history. What's your past 12 months look like?
My man Eddie saying that he would like to book the one-on-one. My man, you have to click the link to book that one-on-one. We are not going to book you manually. You have to click that one-on-one link. that I just posted right now into the chat box. So just like you typed in, click that link, go ahead and put that same number, name, and email on that calendar. And so you can book that one-on-one, choose your time. And so you'll get all the confirmation text messages and emails for the time of that one-on-one. And so Zach, is the one-on-one, by the way, is it going to be on a Zoom call like this, or is it going to be on a phone call? Let me know.
Zoom call. I really like to get face to face, get to know you. What are your goals? What are your aspirations? Really help you out. If you prefer a phone call, well, I like to joke, if you don't jump on the Zoom, I'm gonna call your ass anyway. But we really like to do a Zoom call. I really like to make it like, I hate the way that everything has kind of transpired since COVID, where it's very transactional. It's phone call, do this, click this, shop it, boop, bop, right? I want you to feel like you're taken care of, answer your questions, and give you that real path forward to achieve home ownership. Whether you already own a home and you want to leverage it again, or you've never used your VA loan again, I want to give you that clarity. Again, I'm super passionate about giving us the education information I wish we would have gotten when we were in.
All right. Mario asking, what's the minimum credit score needed for your mortgage company? And yours in
Zero.
particular.
No minimum credit score with me. That's why I don't work for Veterans United, which is not owned by a fucking veteran. Same with Navy Federal, USA. You don't have a 620, they automatically deny you. I've freaking helped veterans who called me. They called me in frantic. They got denied by Veterans United because they had a 615.
Joe Elizalde or Elizald, congratulations on your one-on-one. I see you here, guys. We only have 6 spots left. I went ahead and posted that link into the chat box right above Florentino's last message saying that he would love a face-to-face. So that's what the Zooms are for. The Zooms are so you can be able to see each other's face if you guys want to, and then going ahead and figuring out what that next step looks like, if it even makes sense, right? So next question here is, can veterans use their VA loan benefits more than once for house hacking? And how does that work if they still have a balance on the previous loan?
Yep. So it doesn't matter if you have a balance on the previous loan. You can own multiple homes at a time with your VA loan. Again, it all boils down to your bonus entitlement. Doesn't matter if you're doing it with single family or multifamily. That's dealer's choice, up to you. What do you want to do? Do you want single family? Do you want multifamily? But it all depends on how much bonus entitlement you have. The way that we calculate bonus entitlement, it depends how much you bought your first home for and what your county loan limit is. Every county is different and every purchase price is different. So again, not one size fits all.
Got it. So Florentino asking, you don't have a minimum credit score requirement for a HELOC, bro?
For a HELOC's different. HELOC's on the VA loan. That's a separate loan program. And honestly, I'm very upfront with people. Can I do HELOCs? Yes. Where are you going to get the best deal for a HELOC though? It's a local bank or credit union. Just like to be very honest with people. I get asked about this all the time. And when I compare my HELOC rates, really aren't that great because that's not what we specialize in. We specialize in VA loans or your standard conventional FHA or DSCR investment ones. HELOCs though, banks or credit unions, you're going to get the best deal. I'm not going to screw you over and tell you how great my HELOC rates are when it's not the best benefit for you.
So in reference to the previous question that you answered, for the VA loan benefits for, for once for house hacking, can you use it on a multifamily new construction build?
New construction, as long as you're not the one you're not the one financing the construction. But if you have a builder, they're building it up and you just have to step in and have your permanent financing, yes. But you cannot do a ground up construction on a multifamily property.
There you go. So guys, there are still 21 people on this webinar, and we actually have 5 spots left. Go ahead and click the link in the chat box that I just posted to book that one-on-one before Zach goes ahead and books out for the rest of the night. So we got, 15 minutes left? So there you go. Next question is, are there any common mistakes that veterans make early in the process that kills the deal before they even start?
Yeah. Yeah, this is a good one. Opening up a new line of credit. So don't go buy a new truck. That's happened to me before. Don't buy like the Rent-A-Center furniture on a new line of credit. Don't, for the love of God, if I pre-review with your job, don't quit your job and not tell me. I had somebody under contract just a couple weeks ago. They were pre-approved. We have to verify your guys' employment when you're trying to borrow hundreds of thousands of dollars. This dude quit his job and didn't tell me until the employer said he hasn't worked here in over a week. So please don't quit your job. Also, don't deposit large sums of money into your bank account. Like if you have mattress money, leave it in the mattress until you close. We can't use cash like that. So job, Don't open new lines of credit. Mattress money, leave it where it's at in the mattress.
All right. Let me see. Where do we find out our bonus points from Jeff?
Bonus entitlement, that's a great conversation for our one-on-one, and you'll walk away with knowing how much you have left in purchase power.
Yeah, Jeff already has that one-on-one. Congratulations, Jeff. All right. So let's see here. Next question. What property types work best for house hacking with a VA loan? Is it a duplex, triplex, or fourplex? And is there one that's clearly better than the others?
This is a good question. I would say triplexes are trickier to find. You're probably going to more see duplexes or quadplexes. I don't think one's better than the other than you're going to have more cash flow with a quadplex, but you're also going to have a higher purchase price. So I really think it's what are you willing to manage? What kind of risk do you want to take on? And do you qualify for, is your qualification only going to put you in a duplex, or can it actually bump you up to a quadplex? So there's no real wrong answer. It's what are you comfortable doing? The other thing too, once we look at quadplexes, again, that is 4 units that you have to make sure shit does not go wrong in. So, right, that's 4 different possibilities: a water heater going out, lights going out, flooring being replaced. It could be a higher expense to take care of a quadplex. So you really just need to be careful. Like, are you willing to take on the risk that comes with a quadplex versus a duplex is just your unit, and the other unit could be less to maintain. So you need to think of your maintenance cost when you're looking at these multifamily scenarios as well.
Got it. So, guys, I just posted the link one more time. 5 spots left. I see a lot of you here that are definitely not interacting with us. Go ahead and type into the chat box any questions that you may have. And if you're definitely just looking to get started or you want to know more about the process, click that link into the chat box so you can book that one-on-one. So I see a lot of you here that have not been participating. Florentino cannot be the one carrying this entire chat here. So I'm just kidding for the other guys as well that have been participating. So I have a 400K mortgage and my current lender is telling me I still qualify for an additional 440K purchase. Is that realistic?
I mean, I don't see why not. I mean, it sounds about right, but again, I don't have your loan. I don't have your file in front of me. Maybe, and I could take a look at that stuff, and really walk you through that. I wouldn't say it's far out of the realm of possibility, but my big question is if they haven't verified your income, your assets, or anything like that, may or may not be true.
There you go. So Chad, let's see. Chad, Jesus, Max, Nam, RD, Simone, Sonia, Will. Type in these questions, man. I see you guys here already. Go ahead and type in these questions into the chat box. Book that one-on-one before they completely book him out. So this is now your opportunity to take advantage of this free one-on-one because afterward, we're not going to offer it. So go ahead and click that link into the chat to book that one-on-one before he is completely booked out. We actually have not 5, but we have 4 spots left now. Congratulations. And Jeff, prior to the one-on-one, what info should we have ready for you? Great question, Jeff.
Yeah. If you have an idea of what you're trying to do, whether that's a single family or multifamily, that's great. If you are interested in starting the approval process, have your most recent pay stubs and bank statements as well. And that would get us miles ahead of the rest.
Joe, what if I have a price of land or a piece of land? I'm not sure if he meant price or piece. Will this help with what I qualify for if I'm trying to do a new single family build?
Is it owned? I mean, the question would be, is it owned outright or is there a lien on it? And typically it's not going to you're not going to use it as a down payment because the VA OTC is still 0% down. Whereas see it either if you have a note on it still, it'll be paid off through the OTC process, or if it's paid off, it's reducing your loan amount there. So I hope I answered that for you accurately or what you were looking for.
So Don asked, where can I get the documentation on the different? I'm not sure what he means by different. So if you want to clarify, Don, what you mean by the different, that'll be great. Kiki, what DTI range are you approving right now for a VA multifamily borrower?
What if I told you there is no DTI for VA loans? We only care about residual income, meaning how much money is left after your housing expenses and all your bills are paid based on your family size. So there is no specific DTI For VA loans, we look at residual. And again, what is residual? It is how much money is left after all your bills are paid based on your family expenses or family size, excuse me.
Awesome. So, Don, where can I get the documentation on the different? So it's the same question you just asked. You just separated the on and the on on the chat. So what do you mean by the different? Next question. How do you evaluate whether a property will actually cash flow after you move in and rent the other units out?
So a big thing that we're looking at is the rent roll. What are they currently renting the units for? Is it below market, at market, or above market? This is how we're really going to tell, are you walking into a good deal or a bad deal, or do you have room to increase the rental income to put yourself in a better position? Where a lot of people get hemmed up is that they think, hey, this property is only renting out for $2,000 now, I can never increase it because market rate is 25. Guys, if you get into the property, depending where you're at with laws, some laws will tell you you can only increase X amount per year or so on and so on, but you can look at increasing that rent, right? You're going to have turnover. You're going to have people coming in and out. You have the opportunity to increase the rent as you own it over time.
Don, where can I get the documentation on the different VA loans? Book that one-on-one and you'll get all the documentation you need. Zach, you want to chime in?
What's that?
Did you want to chime in on that?
Yep. I mean, there's that. Robert, do you also have the group, Facebook group link? Did I ever send that to you?
I believe you sent it to me previously. I do not have it on hand. If you want to go ahead and plug that in.
Yeah.
But let's do it. Let's do it at the end of the webinar. Let's do it at the end of the webinar, so people don't get distracted from that.
Yeah.
All right. So we have 3 spots left here to book that one-on-one. So Kiki definitely should be one of them as well that is booking that one-on-one, because she asked, if I aggressively pay down revolving debt in the next 60 days, how much would that strengthen my approval? If I'm aiming for mid to late summer purchase, when should I start the pre-approval process?
Can you repeat that real quick?
Yep. So Kiki asked, if I aggressively pay down revolving debt in the next 60 days, how much would that strengthen my approval? I am aiming for mid to late summer purchase. When should I start the pre-approval process?
I mean, it's hard to tell because I don't know what debt you should be targeting. This is where a lot of people get confused and they're like, oh, I'm just going to pay down debt. There may be some debt that you want to target first and other debt you want to put on the back burner. So if you want a solid answer, our pre-approval process is only a soft check on credit up front to give you that clear path forward. So if you want to know which way you need to be going without guessing, that's the perfect time for our one-on-one to go through the process and really get you on that path, because you may be targeting one credit card where the monthly payment is not impacting you, where another line of credit is really hurting you. If you targeted that one, it would help your pre-approval. So I would say if you want to start the process sooner or on our one-on-one, that's the best bet for you. Again, it's only a soft check on credit. Soft checks do not negatively impact you. Everyone thinks that. That's not true. And you will have a clear path forward on what you really need to do.
There you go. All right. Next question is, I was told the VA cash-out refi was not available in every state. Is that true?
You are in Texas. That is absolutely true. Texas is one of the most strict states when it comes to cash-out refinances. You cannot do a cash-out refinance on a government loan. You can only do it on a conventional loan. So if you're in Texas, you're SOL on a cash-out refinance. On a VA cash-out refinance.
So guys, 2 spots left to book that one-on-one. Kiki, I still haven't seen your name here. Definitely should book that one-on-one if you're looking to buy in summer or mid to late summer. So go ahead and click that link to book that one-on-one before Zach is completely booked out. Only 2 spots left, guys. 2 spots left. Next question is, let's see. What's the biggest red flag that you look for in a potential house hack property that most beginners miss?
Biggest red flag. How long the tenants have been there. That's one of them. And again, kind of going back to what's the micro, what's driving traffic to or from that economy you really want to look at. We have to be careful. We can't tell you, as real estate professionals, I can't be like, this is a bad neighborhood, this is a good neighborhood. You have to do your due diligence on that. So not doing your homework on what's in the neighborhood what is driving the economy of that specific neighborhood is also a big thing. And then also, if the tenants are constantly moving out, there's something wrong with either how the landlord treats the tenants or how they upkeep the unit. You have tenants that have been there for like 2, 3 years. That's a good sign that they like the property, they like the area, they like everything about it. So you want to look at those few things there.
How does the VA calculate rental income from the other units when determining how much you can borrow?
Yep, good one. So we can calculate 75%. How is that determined? With either the current lease agreement, the current rent roll, and we also have to order that appraisal. That appraisal is going to include a rent schedule. So not only are we going to get the rent roll, what are they currently doing? During the appraisal process, the appraiser is going to look at what is the current average rent for the area. So it's kind of a two-step process with that.
Kiera Stinson, congratulations on your one-on-one. So I'm assuming that's Kiki. Congratulations, Kiki, on that one-on-one. Let me go ahead and put here one spot left before you're booked out and 5 minutes left too. So one spot left within 5 minutes. Congratulations, Kiki. One more spot left before Zach is completely booked out for this webinar. So on that free, 100% free bonus for that VA homebuyer strategy call. Next question. With rates where they are right now, does house hacking still make financial sense, or or has the math changed significantly?
I mean, everyone talks about like, oh, the best time to buy a home is like 20 years ago, second best time is today. So as long as you're comfortable with knowing that rent is always going to continue to increase, home prices are always going to continue to increase, it's really just doesn't make sense to you by the numbers now. So there, it's always a good time to buy as long as it's a good deal for you. Again, if we're looking at a place that's $1 million, but they're only collecting $1,500 a month for rent per unit, that's a terrible transaction for you. It's not even going to cover half your mortgage, right? So there's always a good time to buy. It's just what do the numbers make sense by? And as long as the numbers make sense, you're good to go.
There you go. Florentino saying, seeing tomorrow, Zach. Really thank you guys for the service. Excellent info right here. Thank you so much, Florentino. Appreciate you, man. All right. Next question is, guys, one more spot left. Book this man out. We only have 3 minutes left before he runs out of slots. So next question here is, can you walk us through a real example of what the numbers look like on a deal that you've seen work well?
I mean, not in 3 minutes.
I agree to that. So let's just move on. So once a veteran has house hacked their first property, what's the fastest path to acquiring the next one?
Fastest path. You either occupy it for 12 months or you have an extenuating circumstance that causes you to move. Again, those extenuating circumstances, I really like the active duty method, or like, picture is that you buy a house, you come down on orders, you buy another house at your next duty station. If you are outside of the military, you have to have an extenuating circumstance that makes sense. Job change, school districts, upsizing, downsizing. What is causing you to stay in the same area and be able to use your VA loan again?
There you go. All right. We got 2 minutes left, guys. 2 minutes left and one spot left on that booked appointment slots for Zach. So how long do veterans typically need to live in the property before they move out and turn the whole thing into a rental? 12 months, you said, right?
12 months. Yep.
What's your take on a short-term rental like Airbnb versus long-term, longer term tenants in a house hack situation?
The biggest thing with Airbnb is like you have to have a good system, like the cleaners. You have to be able to turn the property really quick. I do hear people say that they make more with Airbnb, but you have to have like a good maid, a good system to be able to flip that property really quick. Kind of like a hotel mindset, right? You check out, somebody can go and clean it up, make it all spick and span for you really quickly. So it can be good. I think you just have to have a good system. And most of the companies that I see manage Airbnb, because there are companies that will manage your Airbnb, they just take a lot of money from what I hear. So I think it just depends on what are you willing to risk. There also can be a lot more damages with Airbnb compared to a long-term tenant, but pick your poison. You're going to have risk with either way.
All right, guys. So we are out of questions, and that's basically it. The webinar is basically concluded. Zach, did you want to go ahead and drop that link for the Facebook group?
Oh, yep.
That'll be a great time. So, guys, if you are looking to join a like-minded community of veterans and military service members or inactive military service members that are looking to buy. Go ahead and click that link into the chat box to join the Facebook group if you have Facebook. So, Zach, do you want to chime in on that Facebook group and anything else that you wanted to comment?
Yeah. So there's some other people out there trying to teach veterans about the VA loan, and they are charging $10,000 to get into a Facebook group. This is absolutely free. This is my passion. This is given the education information. Like I said, I wish we would have got. This is a free resource. Please go in. Please join it. I really hate the person that's charging $10,000 to get into a Facebook group when this education information should be free. We should have learned about it when we're in. So please join it. It's a resource for you. You can ask questions. You can see that I post a lot. I try to post all these recordings in the group as well. So if you want to circle back and watch this again, it should be in that group as well. It'll just take me a couple days to get it uploaded.
All right, guys. So let's go ahead and conclude tonight's webinar. Thank you guys so much for being here. And thank you guys so much for giving Zach a 1 hour long attention span. And as well as we want to congratulate all of you guys that booked your one-on-one home buyer, your VA home buyer strategy call with Zach. Zach, what do you have to say to your audience before we go ahead and depart?
Yeah, I really just appreciate everybody's time. I hope that this was valuable information to you. I know what it's like to serve, whether you're currently in the military or out of the military. And I just hope that this was some benefits about personally what I think is our best benefit earned through service is the VA loan. I hope you got some insight on it, on how to leverage it, how to build wealth, and really set not only you up for success, but also your family. Thank you so much.
All right, guys. So let's go ahead and conclude the webinar. Zach, go ahead and click end meeting now so we can go ahead and do that. Congratulations, guys, again for that free one-on-one.
Awesome. Thank you, everyone.